Preparing for a financial analyst at General Mills interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work as a financial analyst at General Mills? I'm interested in General Mills because its brands sit in everyday consumer routines, while the business still faces real challenges around inflation, retailers, innovation, and changing preferences. A financial analyst can connect sales, pricing, volume, mix, and costs to practical decisions. I also value the company's emphasis on integrity and teamwork. This role appeals to me because I could build strong analytical discipline while helping leaders allocate resources and improve performance across a recognizable global portfolio. While answering, connect General Mills' portfolio of trusted food brands, its consumer staples resilience, and the analyst's role in turning operating data into decisions. Mention curiosity, collaboration, accuracy, and interest in improving everyday products. Question 2. What are the main financial drivers of General Mills' business? General Mills generates results through a combination of volume, pricing, product mix, and cost management. Revenue depends on consumer demand, retailer orders, innovation, promotions, and market share. Profitability is influenced by ingredients, packaging, manufacturing, productivity, freight, labor, and foreign exchange. Brand investment supports long-term demand but affects near-term earnings. I would monitor these drivers together rather than view sales growth in isolation, because profitable growth and cash conversion ultimately determine business quality. Make sure to cover volume, price, product mix, brand investment, retailer demand, commodity costs, productivity, foreign exchange, and promotional activity. Explain how these drivers affect revenue growth, gross margin, operating profit, and cash flow. Question 3. Walk me through how the three financial statements connect. The income statement measures revenue, expenses, and net income over a period. Net income flows into retained earnings on the balance sheet and begins the operating section of the cash flow statement. The balance sheet shows assets, liabilities, and equity at a point in time. Changes in working capital, capital spending, depreciation, and financing explain cash movement. For example, higher inventory can reduce operating cash even when reported profit remains strong, linking earnings analysis to liquidity. In your answer, talk about the income statement's profit calculation, the balance sheet's assets and financing, and the cash flow statement's reconciliation. Highlight net income, working capital, capital expenditures, debt, and retained earnings links. Question 4. How would you approach preparing a monthly forecast for a General Mills business unit? I would begin with actual results and compare them with the latest forecast, identifying changes in volume, price, mix, costs, and timing. Then I would consult sales, marketing, supply chain, and procurement teams for updated assumptions. I'd incorporate seasonality, promotions, commodity exposure, productivity initiatives, and foreign exchange before building base, upside, and downside cases. Finally, I would document assumptions, review material risks with stakeholders, and update the forecast as new information arrives. Be sure to mention historical actuals, current orders, volume and pricing assumptions, seasonality, promotions, commodity exposure, operational input, scenario analysis, and variance review. Emphasize transparent assumptions and timely communication of changes. Question 5. How would you analyze a revenue variance using price, volume, and mix? I would bridge budgeted revenue to actual revenue by isolating volume, price, mix, promotional spending, and currency effects. For example, a 5% sales increase could reflect higher prices rather than stronger demand. I would compare units sold, average realized price, product categories, channels, and customer data. Mix matters because premium products may improve revenue and margin disproportionately. I would reconcile the bridge to reported results, investigate unusual movements, and explain the business implications clearly. While answering, define the bridge from budget to actual revenue and separate volume, price, mix, promotion, and foreign exchange effects. Explain why mix matters and how you would validate the analysis against operational data. Question 6. If commodity costs rise sharply, how would you assess the impact on profitability? I would quantify exposure by commodity, unit usage, purchase timing, contracts, and any hedging coverage. Next, I'd estimate the gross margin impact under several price scenarios and evaluate offsets such as pricing, productivity, reformulation, sourcing changes, and pack size adjustments. I would also consider potential volume or mix reactions because consumers may trade down. The analysis should separate near-term cost inflation from mitigation timing, then show management the expected profit and cash flow consequences. Make sure to cover exposure by ingredient or packaging category, timing, hedging, pricing actions, productivity, reformulation, volume elasticity, and gross margin sensitivity. Distinguish immediate accounting effects from longer-term mitigation strategies. Question 7. How would you evaluate working capital performance in a food manufacturing business? I would analyze receivable days, inventory days, payable days, and the resulting cash conversion cycle while comparing them with historical and operational benchmarks. Inventory deserves special attention because seasonal demand, shelf life, safety stock, and service levels affect both cash and waste. I would investigate slow-moving items, retailer payment behavior, production schedules, and supplier terms. A good recommendation balances cash release with product availability, freshness, customer service, and the risk of stockouts. In your answer, discuss receivables, inventory, payables, days metrics, seasonality, service levels, spoilage risk, retailer terms, and cash conversion. Explain why working capital improvement must not damage product availability or customer relationships. Question 8. Tell me about a time you investigated a significant financial variance. In a prior project, actual expenses exceeded budget by approximately 8%. I first separated timing, volume, rate, and coding effects, then traced the largest variances to transaction-level detail. I discovered that a recurring vendor charge had been posted to the wrong cost center and that one planned invoice arrived early. After confirming the facts with procurement and accounting, I corrected the classification, updated the forecast, and created a monthly review. The process improved reporting accuracy and prevented repetition. Be ready to describe the situation, materiality, analytical steps, root cause, stakeholders involved, corrective action, and measurable result. Demonstrate structured thinking, skepticism, ownership, and the ability to communicate findings without blame. Question 9. How would you forecast sales for a new General Mills product? I would start with comparable launches and estimate distribution, velocity, price, promotional support, and timing by channel. I'd build assumptions for trial, repeat purchase, seasonality, and potential cannibalization of existing General Mills products. Retailer commitments would inform the initial base case, while downside scenarios would reflect slower distribution or weaker repeat rates. After launch, I would replace assumptions with actual shipment, scan, and margin data, then refresh the forecast and explain deviations. Be sure to mention comparable products, distribution, trial and repeat rates, price, promotional support, cannibalization, seasonality, retailer commitments, and downside assumptions. Explain how you would update the forecast using early performance data. Question 10. Which Excel tools would you use most often in this role? I would use pivot tables to summarize large datasets, XLOOKUP or SUMIFs to connect schedules, and logical formulas to flag exceptions. For forecasting, I'd build clearly labeled assumptions, scenario toggles, sensitivity tables, and concise charts. I would also use reconciliation checks, data validation, and conditional formatting to catch errors. My priority is not simply producing a sophisticated workbook. It is creating a transparent, auditable tool that another analyst can understand and update confidently. In your answer, mention pivot tables, SUMIFs, XLOOKUP, logical formulas, charts, scenario analysis, data validation, and model controls. Emphasize readability, reconciliation, error checking, and avoiding unnecessary complexity in shared files. Question 11. How do you ensure the accuracy and integrity of financial data? I begin by confirming the source, reporting period, definitions, and completeness of the data. I then reconcile totals to the general ledger or approved reporting system, test unusual movements, and compare results with prior periods and operational metrics. I maintain documented assumptions, controlled file versions, and clear review checks. If information conflicts, I investigate with the owner rather than silently adjusting it. This approach protects decision quality and creates an audit trail while keeping deadlines visible. While answering, focus on source validation, reconciliations, control totals, unusual item testing, version management, documentation, and review. Mention how you would resolve inconsistent data while preserving an audit trail and meeting reporting deadlines. Question 12. Describe how you would work with a non-finance partner who challenges your analysis. I would first understand what the partner believes is missing or incorrect, because operational context may reveal an assumption I overlooked. Then I would walk through the data, definitions, and calculation in plain language, separating verified facts from estimates. If disagreement remained, I would test both views against source data and agree on a follow-up analysis. My goal is not to win an argument, it is to reach a reliable conclusion and maintain a productive relationship. Make sure to cover listening first, clarifying definitions, using operational evidence, separating facts from assumptions, explaining financial impact, and seeking agreement on next steps. Show respect for functional expertise and willingness to revise conclusions. Question 13. How would you evaluate whether a brand investment or cost-saving initiative is worthwhile? I would compare incremental benefits with the full investment, including marketing, implementation, working capital, and execution costs. For a brand initiative, I'd estimate incremental volume, price, mix, contribution margin, and repeat demand. For savings, I'd validate whether benefits are structural or merely timing-related. I would calculate payback and return on investment, model downside risks, and define performance milestones. After approval, I'd compare actual results with the business case and explain corrective actions. In your answer, discuss incremental revenue, margin, cash flow, implementation costs, payback, return on investment, risks, strategic benefits, and a post-investment review. Distinguish savings that are sustainable from one-time reductions. Question 14. What would you do if you discovered an error in a report shortly before a deadline? I would verify the error quickly, determine its materiality and affected outputs, and notify my manager or the responsible controller immediately. I would preserve the original file, correct the underlying source where possible, rerun the relevant checks, and communicate the impact clearly before distribution. If the deadline prevented full correction, I would escalate that limitation rather than conceal it. Afterwards, I would identify the control failure and add a check to prevent recurrence. Be sure to mention assessing materiality, preserving evidence, notifying the appropriate manager, correcting the source, documenting the issue, and communicating implications. Emphasize integrity, controlled escalation, and preventing recurrence rather than hiding the mistake. Question 15. General Mills sales increased but operating profit declined. How would you investigate? I would build a profit bridge from the prior period, separating revenue growth from margin and expense movements. I'd test whether pricing was offset by lower volume or unfavorable mix, then quantify commodity inflation, freight, labor, manufacturing inefficiencies, promotions, brand investment, foreign exchange, and one-time costs. I would reconcile the bridge to the statements and validate major items with operating teams. The conclusion should identify the largest controllable drivers and propose actions, not merely describe the decline. While answering, build a structured bridge through price, volume, mix, promotions, commodities, manufacturing, freight, labor, brand spending, foreign exchange, and one-time items. Prioritize material drivers and recommend targeted follow-up analyses. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.